good economic news around this week?
You know, there was, and there was some, of course, there's plenty of bad news, like construction index, the lowest ever in Australia's history. The services index, lowest ever in Australian history. But the trade surplus for March came in at a record high, best ever. But that was March, and let's face it, you know, the real bite of the coronavirus wasn't there. So I'm not going to sort of take that as being a really great statistic. But the one that really is worth watching, Laura, which I think is relevant to what the Prime Minister says today about the release of us from restrictions, was that the ANZ Roy Morgan Consumer Confidence number, which is a weekly number, which I don't usually rate very highly because it is weekly and consumers can jump around, you know, and be negative one week and positive the next. But because we are trying to get a feel for how all this social distancing and restriction and lockdown is affecting consumers, it's gone up for 5 weeks in a row. And it's a 37% rise over that period. So, and it's all because the news has been good on infections and death rates, and gradual restrictions have been released. These are having a big impact on consumers, which goes to prove to me that if we don't have a second wave problem in this country, we will see a rebounding economy, like what the Reserve Bank has predicted. You know, they've predicted basically, looks shocking in June, 10% unemployment, 10% contraction of the economy. But by the end of the year, the overall contraction of the economy will be 6%, setting us up for a rebound in 2021. Now, if the consumer wasn't reacting positively, I wouldn't be saying, oh, this is a good chance. This is a good chance.
Okay, I like that. We'll go with that, Peter. Of course, on the other side, in the medium term, is the concern about consumer spending and confidence in households? I mean, people might get through this and go, oh, we better keep a bit more money now for a rainy day.
Yeah. This is what I call the new age coronavirus expert on everything about us. And like, look, you could be absolutely right. You could be absolutely right. And it makes a lot of sense. A lot of people will be very cautious. And by the way, if unemployment does get to 10% in June, all those people aren't going to be going out, you know, spending like willy-nilly. But it is going to depend on the rebound pace of the economy. And if it's slower than what the Reserve Bank's expecting, I think what you're saying is absolutely right. But that in a sense will explain why the economy contracts at 6%. Exactly what you said will explain the numbers that come out. But the bottom line is, how quickly do we become our normal people again? And it's that normalization process that will determine whether we get the 6% growth in 2021. And by then, those consumers who are being really cautious, as brilliantly described by the economist Laura Jays, will ultimately start spending again and will justify those numbers. But it's all going to depend on, I think, second wave implications. No second wave implications, but then all my optimism is absolutely spot on.
Okay. Peter, what about house prices? They seem to be holding up for now. There's not a lot of stock though.
No, that's right. And I think this is another unusual market. The NAB has basically come out and said the big capital cities of Australia expect double-digit falls. And I think that probably makes a lot of sense, because the people who are selling now, the people who are prepared to put their house on the market, they're either desperate and they have to sell, or they are so worried about the future, they're thinking a Great Depression is coming, and they just want to get out and get their money and whack it in a bank that they hope won't fail. But I think this is going to be a rapid fall in prices for those people who are on the market. But once again, if the Reserve Bank's bounce back scenario is right, when the spring sales come along, I think there'll be a bounce back of house prices. So the net effect may well be a 5% fall. And then going into 2021, when I hope normalisation returns, we'll see house prices start rising again, because Australians just can't live with lower house prices.
And just before I let you go, how are banks looking? Pretty solid, because they're carrying a lot of debt at the moment.
Yeah, they are. but they went into this as you know, in the top 10 banks of the world, and the balance sheets are really strong, because even when you looked at what NAB was saying and ANZ was saying, it didn't affect the quality of its balance sheet, and that if it did, I think the share prices would have fallen. But in fact, the share prices of these banks have actually risen since they actually fessed out that they A, weren't going to pay a dividend, and B, they were worried about the future. Their bottom line hasn't been negatively affected now. It's what they think might happen. And I think the bank bosses have exaggerated the fears, because it's a sensible thing to do. It'll make them look like geniuses, in say 6 months' time, when the news isn't as bad.